what we have seen in the last few years is an increase in fixed income yields. But if you look at the current scenario, there could be inflation pressures in markets like US, where the president is talking about a lot of tariff hikes and things like that. But in the domestic economy or in India, if you look at it, in India, inflation has been moderating, and with a moderation in global commodities like crude oil, which generally tends to have a correlation with how the global growth pans out, the inflation is also trending down. And when inflation is trending down and interest rates are falling, that is a good setup for economic growth to pick up, which is generally conducive for equity markets. So, from that perspective, an investor with a long-term focus, he can benefit from the longer-term earnings compounding. When you look at stock prices, it is a result of two simple things. One, it is a product of the valuation multiple, which is in a lot of cases, we use it as price to earnings ratio. That would be multiplied by the earnings per share, the earnings which companies generate on a per share basis. So when growth picks up, this EPS growth or the earnings per share growth tends to accelerate, and that would translate to better stock prices. So in this kind of a scenario, it is generally good for equity markets. And what we have historically seen, and what could possibly pan out in an economy like India, where the growth is a lot higher than the fixed income yields. So if you look at the current trajectory, the India 10-year bond is trading at a yield of roughly around 6.2%. Whereas if you look at companies which are listed in equity markets over long periods of time, they have grown their earnings per share or earnings by about 12-13%. And in the current setup, we don't perceive the potential long-term future growth to be anything different than what we have seen in the many years in the past. So therefore, from an equity investor perspective, the potential to earn return is much higher in equity compared to what you could earn in fixed income. And therefore, if you have a long-term focus, it is always important to allocate a good part of your portfolio towards equity, which can help in better wealth accumulation over long periods of time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.